All right, years ago, you worked with your certified financial planner, you got long-term care insurance in place, been paying on it for years, then all of a sudden, you get a notice, you get a bill that the premium has increased. You've got to pay more for your coverage or make some changes. Is this legal? What are your options? Why is this happening? I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So if you've been working with your certified financial planner on the risk of needing long-term care services out there in the future, having assisted living, needing some care at your home, hopefully that would happen before you'd consider assisted living, or obviously do everything necessary before going into a nursing home, but needing to go into a nursing home. We've all had family members that have gone through this, and we know that it's just an awful situation. It's extremely expensive, and that can happen for a long time. And so Medicare doesn't cover this. Normal health insurance doesn't cover this, and Medicare supplement doesn't cover this. So how do you insure, how do you protect if you're not self-insured, if you don't have the financial resources built up on your own to just cover this $10,000 a month expense if you needed to go to a nursing home? How do you cover and manage this risk? Long-term care insurance. Now, there's different solutions out there. There's hybrid policies and others that we've talked about on the Wise Money Show channel. But in this instance, say you bought a traditional long-term care insurance policy. Now, that is the best way to solve this risk. It's got some drawbacks for sure, but if you're just trying to solve for this risk, it's a fantastic way to do it. But can they increase that cost, the premium that you pay for that health insurance, or is it locked? Is it set in place and will never change? The truth is, they've got to go through the full actuarial analysis to see what's the right price that we should be charging for this insurance, okay? And they do that. It's got to be board approved as well. But then they state, everyone's policy states that they have the authority. They don't have the authority to just cancel you if the price changes, if their cost structure changes, or if they realize these actuaries didn't plan appropriately for what was going to be happening in the future. So they can't just cancel you, but they can increase the premium if they can prove that it's necessary. And usually how this works, and I'm not an expert in all of these areas, but in general, they do this, your insurance company would do all the math and do all the tabulations using their actuaries to say, hey, here's how we originally came up with the premium, but here's what we need to increase the cost to in order to reflect reality, okay? And then they've got to get that approved by the insurance board, insurance commissioner of your state. And I've seen it where the insurance commissioner says, yeah, you're right, but we're not giving you that much increase, or yeah, you're right, or no, you're wrong, we're not going to improve it. If the insurance commissioner then grants that increase, then you're going to get one of these letters, and it's fully legal. I mean, your long-term care insurance, they're guaranteeing not to cancel you, but they may need to raise the rate. Why would they raise the rate? Okay, and then we'll get into the choices. I said it's legally allowed, okay, so why would they need to? Well, if the actuaries originally assumed a fewer percentage, a smaller percentage of people would actually use this coverage, and it's now proving that more and more people are using the coverage, that's one reason. And that is actually happening with long-term care insurance. More and more people are using it than they've actually expected. Another reason is the cost of providing that care could be more expensive than the actuaries originally projected. That's also true. The cost of care has absolutely skyrocketed. You know that. And even the most recent projections of what this care would cost, reality is being, it's even higher than that. Third, when you pay your insurance premiums, they don't just go off into cyberspace or sit in someone's backyard. They're actually invested. The insurance company uses those dollars to cover fees and everything else, but then they take the remaining amount in an investment vehicle. They invest it, okay? And if investment returns, specifically interest-based investment returns, aren't as high as what the original actuaries expected, then that could also mean they've got to increase your premiums. All of these things have happened, okay? I would add one more. We've mentioned with long-term care insurance, I mentioned it at the beginning, when someone goes into a nursing home or needs care, they could need care for a long period of time. My father-in-law, before he passed, he was diagnosed for early onset Alzheimer's 6 years before he passed away. That's a long time for an insurance company to be covering the bills. He didn't need care immediately, but he needed lots of care, obviously, at the end. And so, very hard to manage. So if people are living longer, which is also happening, that could make the cost more expensive. Guys, all of those things are happening. All of them are happening. So I'm not on the side of the insurance company. I'm just justifying that, yeah, based on what they projected 5 years ago, 15 years ago, I think is when my folks purchased a long-term care policy, it's very different. Things have gotten more expensive, more people are using it, people are living longer, and the investment returns, the fixed interest rate returns are just not what they thought it was going to be. So that justifies, and I would say is reason to believe that your long-term care insurance premium could go up. If you get that dreaded, disappointing news, what do? Well, I'm not telling you, oh, just be fine, it's fine. No, that's real money. This is coming out of your budget, especially in retirement when you might feel like, or depending on how your situation's set up, you've got a fixed income. What are your options? Well, you've got 3 of them, and you're going to have them detailed out to you in the letter that you receive from your long-term care insurance company. But your first option is you could say, no, I'm going to keep paying the same amount, but reduce my coverage in some way. So basically, I'm going to continue. You can't raise the price on me. I can't afford it, or I'm unwilling to. Just reduce my coverage. So you could reduce the daily benefit amount. You could reduce the length of your coverage. You could increase your deductible. They call that an elimination period. So from the time you need care, increase the number of days that you pay out of pocket before your insurance company kicks in. You could, change some of cancel some of your riders or other features, or you could even cancel or change your inflation protection. There's lots of ways that you can trim or cut back your coverage to pay the same amount or even pay a little bit less. Would I automatically suggest that you do that? No, because the reason your insurance is actually saying you got to pay us more is because more people are using it. The cost is higher. They're basically saying, hey, it turns out this type of insurance is more important than we even thought. To me, even though I'm frugal, I like to keep as much money in my pocket as possible, and definitely for you, I want you to pay the least amount for insurance. But it's got to be the right coverage, okay? And if they've been able to prove this insurance is even more important than we thought, it's even more valuable than we thought, you've got to pay more, I don't love the idea of just automatically cutting coverage. Work with your certified financial planner. Look at your financial situation. Say, all right, we did a full analysis when we originally decided to do long-term care insurance. Update that analysis. Do we still need this type of coverage? If so, can we afford it? And do we need to make some changes? Your second option, if you don't want to reduce your coverage, you can cancel your coverage. And sometimes they even offer, so you can just stop paying. You can stop paying at any time. You don't get any refund, but you could just say, hey, I'm not doing the increase. And listen, if this increase is a sign of things to come, I'm done. I'm gonna cut my losses here. Sometimes companies will give you the option to get a paid up, so instead of just canceling and getting nothing, sometimes you can cancel and get a paid up amount of insurance if you've held it long enough, where your coverage is just, hey, I've paid into this thing for a while. Give me as much coverage as I've already paid for it. And it's going to be a tiny amount. Sometimes you have that option. And then third, I sort of already alluded to this, and you sort of, it's the obvious one. You could choose to pay more. Your coverage would stay the same. What you pay quarterly or semi-annually or annually would increase. I would tell you, you've got to consider this with your certified financial planner. Just like I wouldn't say, don't automatically cut your coverage, I wouldn't say automatically just pay for it, okay? You've got to understand, how important is this insurance coverage for your specific financial life? Maybe you're more self-insured. Maybe you're more dependent. Maybe you're now more likely to be eligible for Medicaid, although be very careful with that. Work with your certified financial planner. This is a reason. Is it an urgent issue? You've got to call them right away, and you better hear back from them right away or get an email back. Maybe this is something that you guys should discuss in your next financial planning meeting. Work with them on that. See what's the best fit for your overall financial situation, then make a wise choice. If you don't have a CFP that can help you with these sorts of things on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com, or you can send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.